This is Justin for Friday, January 6th, 2023. First, let's take a quick look at SPX just because I want to show where some of the price levels are. So the open was inside of Thursday's candle. And then we had a very strong bullish day, got actually past the 100 simple moving average. If we zoom in on the 3-minute here, we can see that, okay, we would have waited an hour to set up a trade. And very conveniently, the candle just before that hour has passed was a 10 EMA setup, bullish. So you could get in with a move above this bear candle right here and a stop probably, a little bit further down like that. And this would have worked really, really well. It's also bouncing right off of this green line right here. And so like 1R is easily this green line, and then 2 would be, you know, like that. I mean, it continued to run and then pulled back a little bit and then continue to just go bullish all day long. Okay. That's a setup. And you could find an option to do that with. Let's go look at SPY. Because SPY, it's like, oh, wait, something looks a little different here. So let me start on the daily. On the daily, it actually is opening above Thursday's candle. So not inside of, but above. This is a bullish gap and go. You can take it right out the gate. We just need a bear candle to start us out. We need a bear candle. What do we get? Bear candle. So your first setup with the 10 EMA would be actually going bullish right here. And a stop would actually need to be below the 10, like right there. Very possible to have been stopped out. It's so close to some levels from the previous day. Let's go look at what that would have been. Probably, just to be conservative with this, because you do have this much, you have this much room here. You'd either get your stop below the pivot from the previous day, because otherwise you got to be basically right here. But either way, it's possible you would have been stopped out right at the low, at which point it's like, okay, well, you just had a bad pullback, you got wicked out, maybe that's all it is. Then here's another 10 EMA setup, bear candle closing above the 10. And again, to be a little bit conservative, probably have a stop here. If you were just stopped out, you probably want your stop further down here. Aggressively would get your stop right here. Any one of these, I'm going to just number them 1, 2, 3. Any of them would have been acceptable places to put a stop, according to the 10 EMA rules. Obviously, number 1 would be the most aggressive because 1.2 hours is already like right there. That would have worked in the next 3 minutes, basically, or maybe you were only in it for 2.5 for getting filled and then getting your target hit. 2 would have taken a little bit longer, maybe up to here to get to 1.2 hour, and then 3 obviously would have taken quite a bit longer to like here to get to 1.2 hour, something like that. Anyway, all 3 of these worked. All you had to do was wait for a 10 EMA that's near or touching, I'm sorry, a bear candle closing above the 10 EMA that's basically touching or near the 10 exponential moving average. And then here we are, the same candle that would have worked on the SPX also gives us a setup on the SPY. And so these 2 candles are very similar in that they have a lower wick touching the 10 EMA, and you've already pulled back some from a previous high, even the previous candle. So I'm going to kind of look for these. This one is much more of a hammer shaped. But I think this may be the kind of candle to look for this year to see if, okay, we've got a lot of compression right here. We got some selling. We're bouncing with that lower wick off of the 10, but there are enough sellers that as soon as we take them out, it's almost like a catapult, like thrusting it higher. And, immediately we get a move up with this very next candle, and then we're going to move up with these next candles. All of a sudden it's bouncing really nicely. I think that's the momentum play with the 10 EMA strategy. So let's go look at, this is the 385 call for SPY, and we're going to draw in the same kind of setup here. So it was, what was the candle? This was the later one, getting a setup like this. So that's maybe 0.7, 0.65, something like that. And your stop would be like there. So maybe you're into 2 of those contracts, or was this the other one? That looks like the other one. And this could just be an absolute zero. Let's see, what were these? Let me check the time. So the time in this one was 8:57. The time in this one was 9:27. So yeah, 4 minutes apart from each other. 9:27, yep. And 8:57, yep. So the high in this candle was 0.34. So really you could have gotten into this. Basically, you could get 3 contracts. Get in 0.35, stop at 0.05, or even just stop with nothing. So that's absolute zero, getting 3 contracts. And then it's like, as it starts to go and you hit your target, maybe just let some of it ride. And it would have been all day, but it would have been a huge gain. That's one way to play this. The other way would have been with this one. The high was 0.58, so you can get into this with 0.6 and your stop down at probably 0.3. So that's again about 0.3 of risk for the contract, be 3 of those to get a $100 risk. So you're just into it a little bit higher, but still just basically the same amount of risk, around 0.3, 0.35, something like that for the amount of risk. You're into 3 contracts. So both of those would have been into 3 contracts. You're just looking for a target a little bit higher. You could do this differently with another contract, which is maybe in the money or at least a little further down. This one, the range in this is 0.24, the 927 candle. So you're in at maybe 3.4 and your stop is around 3. So maybe 2, maybe 3 of those contracts. And then the other one was here at 8:57. So you're into this at 2.3 and a stop probably below this would be, I want to say for this one, maybe 2.3 and 1.8. So maybe just 2 contracts on this one a little further down. But this is a really nice thing with SPY contracts is they are expiring every day now. That's newer as of, I think, late last year in 2022. And then there's so many strikes that give you some range on this that you could even be further in the money. You're going to see a decrease in volume. You're going to see more of these wicks that, or more of these candles that are only single candles or single contract or single strike. And so this doesn't look like something you can really set it up with. You may get skipped. You might miss something, but the contracts are there. So this is something where you can look to play it this way and just know that, okay, you're going to use that full risk. So this one be maybe getting in at like 5.5, just set up a stop limit at 5.5 and your stop is way down at 4.5, just to use that whole risk. Obviously your gain is going to be moving more quickly, but it's just a matter of where your comfort is, where your risk is, or what the size of your R is to be able to trade these things. But you really have a lot of literally options when it comes to this. And so, all these give you just other ways to play SPY. You can do the same thing with SPX. I usually stick to the 0, 25, 50, 75. Just see if there's some really better contracts with more volume, something like that, that will help me just kind of hone in how I want to play that. You can look for those that are out of the money. This was the kind of day it was just a really big move, and so you wouldn't necessarily have known that as it's opening, other than it is, like I said, the SPY is a bullish gap and go, and so it just had the momentum, had the trapping of the bears. We had talked about, I think on Thursday's video, that we were trapping bulls from the previous day. So this was a bearish gap and go on Thursday, and here we are with a bullish gap and go on Friday. Now, I'm not saying this is just going to run, that we're going to continue higher. It has that potential because we've now trapped bears. We've closed actually above a lot of these other levels here. Let's go back and look at SPX and see where that is at. Give it a sec here. So yeah, we're back above these levels, going back to this candle way back here in early September. So we've actually gotten a close above that. We're above the 100. So we easily could run back up to the 200. I think, this is more directional than we've had a close yet, because even on this day we closed bearish, even this day closing bearish, we hadn't gotten below all of these lower wicks. This day came the closest, but we still had this lower wick here. And so this is the first time we've actually gotten past and closed past all of the previous upper wicks of any of the candles, bearish days or bullish days. It just shows that there is, I guess, just something more going on, more volume, more whatever, more buyers pushing that up. Maybe it's something with a new year. Maybe it's something with just fresh money coming in. Who knows? But at least right now, I think it'd be great if we could get some buying to come back in, get to the 200, even push back up into these lines where we've rolled back down before, make people think that, okay, we're going bullish, we're past the 200, let's keep going. And more bulls are going to get in at that point. And at that point, we've trapped more bulls, and to have a rollover then would just trap more bulls. I'm not asking for that. I'm not wanting that, but it makes sense that that sort of thing could happen. I think it was back on SPY. I thought that we were seeing a bit of a island reversal. Yeah, so the island reversal idea here, where we really had just a little bit of a gap still intact between these two candles, and we closed part of that. We started to fill part of that gap on December 21st, but we still had a little bit below this lower wick from the 15th to this upper wick on the 21st. That's we totally closed that gap now with this bullish day. So I thought there was a chance that if we do go bullish, what if we gap up? What if we are trading sideways longer? This could turn into another island reversal, and it's not. This candle negates that idea, but it is something I was keeping an eye on just to be able to speak to it. So that would be the only other thing that says, okay, we've closed this gap, now we can go lower, but we actually still have another gap right here. So the potential is still there. We could have a bull day and go up and close this gap next. There isn't another open gap at this point. It's not the same gap on SPX. Things look a little bit different, obviously, just the way that things opened on Friday. So it's good to just be able to compare, go back and forth between those charts and get a good sense of, okay, if we know these trade very similarly, there's probably some algorithm for how it's priced slightly differently to make sense of. I don't know what that is. If somebody wants to comment or where to look it up, I'm sure there's a place to find all that out. It might just be just how it tracks it, one being an index and one being an ETF. So, but anyway, because they trade a little bit differently, it gives different opportunities. But with SPY, it's really nice to be able to pick from a number of different strikes in the money, have some room to set up a trade with your risk level, and be into multiple contracts depending on what that setup could be. And then on a day like this, it can really, really move. So bullish gap and go, looking for the bullish trade all day. One of the better opportunities would have actually been the other direction from where I went with this. So if we go look at, no, not that one. I mean, this could have worked, but maybe 388. I was looking at one of these earlier. You could buy it for next to nothing. So even midday, you could spend $10, $15. If you had $100 risk, you could easily get into 6-7 contracts, absolute zero, and just about do a 10x on that contract to the high. Now, you would not have known what the high would be. If you're into something like this, if you're trying to buy earlier in the day, just that long shot, that gamble, at least know that you're trading with money that you're okay to lose, and it's more likely not going to work out. This is where you can have an imbalance in your risk reward. So if you know that when you're rewarded, when you win, it's going to be a huge win, you're probably going to win much, much less often. And so in a case like this, if you're just going to throw way out of the money contracts on a Friday and get into something really cheap, you're going to want to take some profits, build up, kind of your education on how these can move, how they've historically moved, and make sure you understand that most of the time you're actually going to be getting either stopped out or just exiting for break even, exiting for a loss, and those will add up much faster than those gains. But then when you get the gains, it will significantly outpace the losses. And so understanding that the mentality of that is really a challenge, knowing that you're actually going to lose a lot. Let's say you're going to lose 9 times out of 10, and that one winner out of 10 will cover all your losses. It has to. Otherwise, you're not trading profitably. And so this is one of those situations that if you've taken an R loss and you're down 9R, and on the win, let's say you get 12R, well, then you're still up. But what does it do to your mentality? What does it do to how you are framing your trading journey, that kind of thing? And that can actually be a bigger battle, and easier to just look at things with maybe a 50-50 setup, and then just, try and make your wins a little bit bigger, or maybe take the wins at 1.2R, like we talked about with the 10 EMA setup, and then see what you can do to reduce your losses. And there's a little more of a balance there, and it doesn't get into your head as much. If you think you're 50-50, and a lot of professional traders are 50-50, then it's a matter of getting those setups, moving your stop, and taking the profits more often than, or at least taking the bigger gains when you can, to be larger than the amounts of losses that you're going to take. So anyway, all that comes back to trading strategies and how you actually handle things. And so if you don't know how this all works, you want to learn more, click on the link in the description, and it'll take you to an incredible trading education company that I'm a part of. And I hope that's something that will help you as well. Hope all this helps. This is Justin. Thanks.